let's ask a tough question. What would happen to your finances if you were diagnosed with a major illness tomorrow? It's a heavy thought for sure, but one we really need to think about. Today, we're going to break down a financial tool that was designed for that exact scenario, critical illness insurance. So, is it the safety net it claims to be? Well, to even understand why this product exists, you have to see one really powerful number. 66%. Just let that number sink in for a second. What do you think that could possibly represent? This single statistic right here is pretty much the entire reason a product like critical illness insurance was ever created. It points to a massive, and I mean massive, financial vulnerability that millions of people are facing. So what exactly is that vulnerability? Let's peel back the layers in this kind of shocking financial reality that made this type of insurance necessary in the first place. And here it is. That's 66%. A 2019 report found that's the percentage of all personal bankruptcies in the U.S. that are linked to medical debt. Just think about that for a second. 2/3 of people declaring bankruptcy are doing it, at least in part, because of medical bills. This just goes to show that even if you have regular health insurance, a serious illness can absolutely devastate you financially. And this is where things get really ironic and kind of sad, honestly. Medical science is incredible, right? We're getting so much better at helping people survive things like cancer or a major heart attack, and that's fantastic news. But the devastating part? The bills, the debt, that can follow a survivor for years, long after they've recovered physically. It's like winning one battle only to be thrown right into another one. So with that problem laid out pretty clearly, let's pivot to a potential solution. It's time to introduce the main event of this explainer, critical illness insurance itself. Okay, so what is it in the simplest terms? Critical illness insurance is a policy that pays you a single large payment, that's the lump sum benefit, if you get diagnosed for the very first time with a specific condition that's listed in your policy. You can think of it as a direct cash injection right when you need it the most. And you know, this is the absolute key difference. This is what you need to remember. Your health insurance pays doctors and hospitals. This pays you. The money goes right into your bank account and you can use it however you need to. No strings attached. That complete flexibility is really its defining feature. Okay, the idea sounds pretty good, right? But how does it actually work in the real world? Let's get into the mechanics of it, from buying a policy all the way to actually getting the cash. The whole process is designed to be super straightforward, really. It breaks down into 3 simple steps. First, you buy a policy and you pick your coverage amount. Then, if you get a first ever diagnosis for a condition that's covered, you submit a claim. And finally, once it's all approved, the insurance company pays out that lump sum benefit directly to you. Simple as that. Now, if we dig a little deeper into the details, you'll see the benefit amounts can range quite a bit, from, say, $5,000 all the way up to $500,000. And remember that key phrase, it's for a first ever diagnosis. That's a really important detail. And again, just to drive it home, it's a single payment made directly to you. Now we get to the best part, what I think is the most important part. What can you actually do with this money? Let's talk about the freedom and all the practical ways you could use this lump sum benefit. The list of uses is incredibly broad. You could use it to pay off your health insurance deductibles and copays, maybe for prescriptions or treatments your plan doesn't cover. But here's the thing, it's not just for medical bills. You could pay your mortgage with it, cover childcare costs, replace a spouse's income if they need to take time off to care for you, or even pay for travel to a special treatment center. And this slide just illustrates that flexibility perfectly. The benefit can be used to cover medical bills, all those gaps your regular insurance leaves behind, but it can also be used for life bills. It helps you keep your entire life on track, not just your treatment plan. It's really about protecting your financial health just as much as your physical health. Of course, with any insurance product, the fine print really, really matters. So to give you the whole picture, we need to cover the important details, the limitations, and what this policy is not. So that brings us to the big one, a really critical question that causes a lot of confusion. Is this critical illness insurance the same thing as your regular health insurance plan? And the answer to that is a very clear no. It's officially called an accepted benefits policy. Now, what does that mean in plain English? It means it's a supplement. It's an add-on. It is not a replacement for your main health insurance. Think of it like a sidekick to your main plan, designed to fill in all the financial gaps. And it's so important to be upfront about the limitations. First, it's not for everyone. For example, it might not be a good fit for people on Medicaid. Second, the rules are very specific. That first ever diagnosis thing is key. It often means pre-existing conditions won't be covered. The definitions are also super precise. What the policy's fine print defines as a heart attack might be different from your doctor's general diagnosis. And finally, availability changes by state. This particular product isn't available in New York, for example. You just have to read the fine print. So that brings us to our final thought. When you boil it all down, this type of insurance is really about one thing: trying to create a little pocket of financial certainty in a moment of total uncertainty. It's not about preventing an illness, but about managing the financial chaos that comes with it. And that leaves us with a final question for you to think about. In a world full of unknowns, what value do you place on having a financial safety net?